Okay, peeps, welcome back. So today we're going to be discussing how this high yield dividend stock ETF can make you $2,000 per month. Let's get it. So, which stock ETF am I talking about here? I'm talking about NVDY, or basically, this would be the yieldmax version of NVIDIA. So, it's a very high yielding options income paying synthetic covered call stock ETF. You guys can go to the website here. It's at elevateshares.com/NVIDIA / and you'll basically see it, or you can just type up yieldmax on your search engine and you'll find the website, and then you can scroll through and look at everything. So first thing I want to go over is the stock price. So if you guys take a look at the price of NVIDIA on the charts on the weekly time frame, you guys can see that we recently got rejected off of this resistance area. Why is it resistance? Well, you see all these little wick rejections up here. You get a wick here, 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 and here. And then the price moved lower. That would indicate that this is a strong resistance area. So the price has recently actually pulled back, which means that you guys are going to get this at a deep discount. So is it as good as $20 a share? No, but in order to reduce your cost basis on this, basically what you would want to do is you would want to buy some here at the current prices, which is about the middle of the range, and then just DCA on your way down. Now, you guys might be wondering why. You might be asking yourself, why am I not seeing anything on the RSI and the MACD on NVIDIA, but I'm seeing it on NVIDIA? Well, the reason why is because this fund is relatively new. It just got released in May of this year, so it's only had about 4 months of history. But if I scroll over, whoops, wrong chart. So if I scroll over to the daily here, you guys can see that the RSI and the MACD are actually popping up. The RSI recently just had basically a sell from overbought territory, and we had what's known as a death cross here, which indicates that the price could move down. The MACD had a death cross. You get these increasing red bars down here indicating increased bearish momentum. And price got rejected off of the resistance level, and you're about to have a death cross again on the daily. So last time we had a death cross, it basically pretty much went from this resistance zone back down to support. So what I think is going to happen is that NVIDIA will probably move back down to this 21-ish dollar level. And when we had the golden crosses here, it basically went from about support back up to resistance. Now, if we take a look at the chart of NVIDIA, the actual underlying stock here, you guys can see that this thing on the RSI has been heavily overbought for months on the weekly time frame, which is the largest time frame we're looking at here. This thing did recently have a death cross on the MACD. And before I get too much further into this, the reason why I'm mentioning these things, guys, is because if you have a bearish cross here or a death cross on the MACD, that indicates that the price of NVIDIA could come down, which means that NVIDIA will follow suit because it replicates the price action of the underlying stock. That's what a synthetic covered call is. They don't own the shares, but they trade it as if they're mirroring the price action of the stock. So when NVIDIA comes down, NVIDIA will come down, which means that you get to buy more shares for less money, which will help you eventually get to that $2,000 a month price dividend amount per month much sooner than if you were paying less for more shares. So you can see we're almost looks like we're topping out here. We haven't had a red bar below the weekly EMAs yet, but we did have a death cross after being overbought for months on the RSI, and we have had a death cross on the MACD. If we go back in history here, you guys can see that the last time that we had a death cross was all the way in January of 2022. And the price went from that price range to about 65% down before getting another golden cross down here on the MACD and the RSI. So what does this mean in terms of price? Well, basically what it means is NVIDIA could have a pretty substantial sell-off. Again, this thing has been basically straight up and to the right for almost an entire year now, 340%. So having a decent, 20-25% pullback would not be such a bad thing, and you would be able to get shares of NVDY for a lot cheaper. Keep in mind, we are in the month of September. September is typically the most bearish month of the year for stocks and also for crypto, for any crypto enthusiasts out there. And the Fed is still raising rates. So it's kind of squeezing the economy in terms of demand destruction. So let's get into the next piece here. What is NVIDIA? NVIDIA is basically everything chip related, gaming chips, AI chips, cloud computing chips, you name it. They pretty much do everything chips. So we'll take a look at some of their products here. Or, okay, maybe not. Well, we'll just take a look at the front page. That should be enough. So you get basically 3D virtual conferencing. You got some sort of workspace gig that they got going on here. Superchargers. I'm not really sure what this does. This is works with different language models, and it gives graphic processing units. They got some other stuff here for best practices for how to use their products with Netflix, Fidelity, and other companies. And keep in mind, Netflix and Fidelity are really, really big companies, so that's good that they're doing big business. You get high performance computing, weather prediction, potential quantum classical computing. So that would be the stage in between classical and quantum computing. You get graphics cards for gaming, boost performance. You got all your different games here. By the way, I love Mortal Kombat. Just so you guys know, I am a huge Mortal Kombat fan. You get automotive. They're talking about bringing AI cabins. So you get like this cool AI inside your car that can talk to you and take you places and stuff like that. And then you have the Omniverse. I'm not sure what that is. I'm going to have to look that up. It may be potentially the next stage of the metaverse. I'm really not sure. And then you got factories, industrial grade, edge AI, which industrial basically means corporate level use cases. NVIDIA and Google Cloud Advanced AI Computing Software and Services. And so basically, more or less, these guys are at the cutting edge of technology in terms of chips and stuff. So now let's get into the dividend piece here. So NVIDIA's most recent payout was 92, almost 93 cents a share. Again, I've speculated on this channel. The reason being is because basically in the month of August, as you guys can see here on the chart, if I can get this thing pulled up, pretty much since the beginning of August, we went from resistance down to support and then back up to resistance because the price ended higher at the end of the month. In my opinion, that's probably the reason why we saw an increase in the dividend payout. So you get 93 cents a share. It doesn't say the yield here, which is kind of odd, but if you go to the yieldmax website, you get your yield, 49.65%. You get a 3.99% SEC yield. This does pay out monthly, by the way. If you had owned this in May, you basically would have got paid out in June, July, August, and September. Keep in mind the distributions are options premiums, so these payouts are going to kind of jump around. So let's get into the numbers. The first thing I want to bring up is how many shares of this would you actually have to own outright? Like if you just wanted to get the $2,000 a month outright, you didn't want to go through the compounding process, you just want to say, screw it, I just want to put all my money in, which again, not financial advice, but if it was me, I wouldn't be doing this. I like to stay diversified, but let's just say you're really wealthy and you want to do this as a way to just generate some extra income. So basically, in order to get the $2,000 a month of extra income right out of the gate, you would need to own 2,150 shares. If we times that by the current rate, assuming that the current rate stayed the same, and you didn't want to run the risk of having to pay more for these shares over time, you just want to buy in right now, 2,150 shares would get you about $2,000 a month. So how much is that going to cost you to actually buy these shares up front, assuming that the dividend stays the same over time? Well, if we do 2,150 shares times 2253, it would cost you about $48,439 right out of the gate. Now, I don't know about y'all, but if you wanted to get $2,000 a month in something like, say, Pepsi or even QYLD, that would take a lot less money to get to $2,000 a month, or even less money with something like CLM or SVOL. You guys are going to be paying a lot more capital up front than this to get to $2,000 a month right out of the gate. So that's for people that have a lot of money that, just assuming they just want to throw a piece of their net worth into this thing and generate around $2,000 a month. That's the amount of capital you would need up front. And for people that don't have $45,000 to just put into this thing right away, basically what you want to do is you want to let it compound and grow over time. So we're going to get into those numbers right now. So we got NVDY, the NVDY ETF right here. As you guys can see, I have all the metrics entered. You got NVDY. It's a monthly pair. We do want to reinvest the dividends. The 45 share number is basically $1,000 divided by the current price, or what would have been the current price at the time. So it's probably not far off from where this is right now. And that's how you get your share count of 45. Share price at the time that I did this calculation would have been $22.62. You're only going to put in $300 a month of annual or monthly contributions. Being real conservative here, 15% tax rate, because you most likely will have to pay taxes on these. If you make any income or any gains at all, you're probably going to have to pay taxes. And if you don't, well, I wouldn't recommend it. Not financial advice, but me personally, I don't want the IRS come knocking at my doors. So just saying, you get your 49.65% dividend yield here. We're assuming that the dividend does not increase year over year, it just stays flat. A 1% annual share price appreciation, which is possible when you take a look at NVIDIA and NVIDIA, how much this thing moves around. It's possible for it to increase. And you want to invest for 10 years. We'll go ahead and calculate the numbers here. All right, so as you guys can see, if we want to get to that $2,000 a month, it would take you about 6 years. If you were making $27,000 a month, we'll just round this up and say 27,500 divided by 12, you'd make about $2,200 a month. Keep in mind, this is before taxes. And your total capital amount would be $87,336. So as we saw before, assuming the prices stayed the same and the dividends stayed the same over those 5 to 6 years, your initial amount would have only been about $48,000. So you're getting an extra almost $40,000 in free capital on top of that. So now let's go ahead and increase this and be more aggressive here. We'll say that you're going to put in $500 a month this time instead of $300. So now you would end up hitting that $2,000 a month in just under 5 years. $26,800 per month would yield you roughly about the same amount, $2,200 per month. And again, your capital would be about $40,000 higher than the amount you had to put in initially. We're going to go a little bit more aggressive here. We're going to say that you have some more capital to work with, so you want to put some more money to work. So you're going to put $1,000 a month into this position, assuming that's what you want to do. So after 4 years, you would have about $30,000 of passive income. So we're just going to round this up. Say $30,000 a year divided by 12 would get you about $2,500 a month. So you have more passive income, assuming everything stays the same, in less time. And your capital appreciation has moved up about $50,000. We're going to be even more ridiculous with this and say that you want to put in $1,500 a month into NVIDIA. And after looks like just a little bit after 3 years, you would have about $2,000 a month. So if we calculate this at the 3-year mark, you guys can see that we're pretty much just shy of $2,000 a month. So we'll say like maybe 3 years and 3 months or something like that, and you have about an extra $40K in capital. And if we want to be even more ridiculous about this, we'll say that you're putting in $2,000 a month, assuming that you make more in your job or whatever it is you do for a living. And you would basically, at roughly about 2.5 years, you would be at that $2,000 a month. So 3,800 divided by 12. So after 3 years, you would be at $2,500 a month. And you would have capital appreciation of over $50,000 extra on top of the money you invested in case you decide, hey, I want to take profits, invest in something else, or you don't want to sell and you just want to keep the dividends. So this you could actually increase how fast this grows by putting in the vast majority of your job income and all of the dividends back into this, minus what you would have to pay in taxes. So these numbers could actually change to where you could be closer on this metric to this 2-year mark instead of the 3-year mark, and so on. So, anyways, this is how you could get up to $2,000 a month in dividends with the NVDY ETF. Hope you guys enjoyed this content. Please like, comment, and subscribe, and I will see y'all later. Peace.